JSE All Share is slightly down after 2 consecutive sessions of advances. Global investors awaiting a slew of economic data from several economies and more corporate updates during the week, along with the highly anticipated Federal Open Market Committee meeting minutes. Let's bring in trader and founder of Herenya Capital Advisors, Petri Redelinghuys. It's always a great pleasure talking to you. Thanks very much indeed for coming on. It seems like we're always talking about a lot of economic data that we are awaiting, Petri, but what is driving the market so far in midday trade?
Good afternoon. Thank you for having me. And nothing. I think is the easy answer. Volumes are somewhat low. This is a bit of a trend that we've seen in South Africa over the last couple of years. I'm sure viewers have listened to me complain about this for the last 2-3 years already. Ever reducing trading volumes in the Johannesburg Stock Exchange. So more of that, really. I think that what we're very concerned about, what everybody's watching really, is the US market that is continuously just pushing higher and higher and higher on the back of essentially 7 shares, right? The broader economy is starting to show signs of weakness, that might be a cause for concern. Our local market performed really well. However, over the last 12 months has been under some pressure because commodity prices aren't what they used to be, and have consistently been sort of coming down as the global inflation situation worsens. So we are in a position where we're kind of sitting around and waiting for rate cuts. We've seen, essentially in the East, China is trying to stimulate their economy by doing pseudo rate cuts or cutting the banking sort of reserve requirements on that side, which is in effect stimulatory. So we're waiting essentially for the US to start doing the same, and maybe we could see a bit of a commodity boom. I think that obviously is going to be very good for our market. Other than that, economic conditions are really tough. Some of the company results coming out as well, particularly in the mining space.
Yeah.
And we see as well in the, Italtal put out some results that were quite poor as well. So it's a tough environment out there, right? And there's not a lot of risk appetite. And this is, I think, one of the key drivers behind the market is people who are feeling optimistic about the future, who want to buy, shares for the long run and invest. And this hasn't necessarily, been too successful for them thus far because the markets are under quite a bit of pressure. Well,
let's talk about Italtal in just a moment. But, you talk about mining and, several industries being under a lot of pressure. Amplat's planning to lay off some 3,700 workers, they say, as metal prices plunge 35%. News of layoffs in our environment here in South Africa, never good news.
Never good news, no. So look, there's a lot to be said here. So a few things is, production is essentially down by 1%, which is not so bad. However, the basket price for PGMs that they sell, so these are obviously the platinum group metals, so there's 4 of them. It's platinum, gold, palladium, and rhodium. The basket price for those 4 metals have all come down by some 35%, right? So their profitability is under severe strain. So they've essentially announced a number of cost saving and restructuring measures that they hope to save to the tune of around 5 billion rand. So they're trying to save quite a bit of money. In the process, one of the things they have to do is potentially let go of 3,700, both temporary and permanent staff members, as well as, I think, 630 contractors and sort of independent contract workers, right? So this is a process that they have to submit, obviously, to the CCMA. The Labour Relations Act governs this process, so the final impact on jobs is not known just yet. So there's a long mediation period between labour unions and the company before a final decision will be made. So we don't yet know what the impact is, but the intention is very clear: start to save money, which, of course, there's a bit of a knock-on effect here. The mines are a very large portion of our economy that pay a huge amount of tax, and they also employ an enormous amount of people. So there's dual problems here for our overall economy. 1, we lose more jobs. 2, lack of profitability in the mines means lower tax income. So it just kind of puts pressure on all sides.
Yeah, absolutely.
Yeah.
Shall we talk through the results that you mentioned posted by Italtal? They posted results and cash dividends for the 6 months ending 31 December 2023. How was that performance?
So I guess not too bad. It was confusing. I think let's look at the positives here. for me, at least, the positive that I can see is that they are building a cash position, which is quite nice. So if you look at their, everything is essentially down. Headline earnings is down 15%. Earnings per share is down 15%. Trading profit is down 17%. System-wide turnover is down 2%. Ordinary dividend per share, they're still paying a dividend. Great news, 27 cents, but that's also down something like 16%. So what's the positive here? The positive is that some time ago in the previous sort of season or previous financial year, they did a bit of an optimization process to try to optimize their production and distribution facilities, right? And obviously just tried to cut costs on production and be as efficient as possible. That has gone off essentially without a hitch and is kind of paying dividends, if you will. However, the broader economic environment is relatively tough. So it's been a difficult trading situation for them, and there's also quite a bit of competition in the space. The positive here is that they're building quite a solid cash reserve, right? So that kind of translates into just like cash on hand. Cash on hand is up 76%, so that's 1.5 billion rand that they have on cash compared to last year's 800 million. So that's fantastic, right? So what does it show you? It shows you a management team that's very disciplined and in the hard times are managing to cut costs and save a little bit of money and are not spending it on willy-nilly. They're very, very disciplined with how they essentially spend on capital expenditure, how they spend on marketing, how they spend on expansion and growth, and they're kind of gone into defensive mode by the looks of things, which I think is the hallmark of a company that's been through a number of cycles before and has an experienced management team that will at least see it through to the other end when times are good again. Yeah.
Delta Property Fund is such a fascinating story, isn't it, Petri? It's now responding to the public censure and fine imposed by the JSE, 7.5 million rand fine over the publication of false and misleading information. That's an interesting one. What's going on there?
Yeah, okay, just a bit of background, I guess, a bit of history first. So a new management team took over Delta Property Fund, which was, I suppose you could say, being mismanaged for some time, and they came in, relatively recently. And they then eventually went back and restated all the financial statements from 2018 to 2020 for that 2-year period, saying, look, we know that there's winds in the woodwork. The previous board didn't disclose all the information that was necessary. So they had auditors essentially re-audit those 2 years and then republish the corrected and now accurate financial statements, which the market obviously hated, right? This led to all sorts of penalties and fines and investigations, all sorts of stuff. The JSE eventually came and said, well, look, this is a breach of your listing requirements, and we will impose the maximum fine that we can, which is 7.5 million rand. For not disclosing financial statements accurately and correctly and timeously. Sure. However, the good news here is that 5 million of that 7.5 million is kind of a suspended fine. Yeah. So it's kind of like a suspended sentence. If they do anything similar in the next 5 years, they have to pay up the full 5 million. If they don't, then the 5 million rand fine goes away. So the new management team has obviously done quite a bit of work to rebuild trust with investors and with the JSE, and to be a lot more transparent with their investors and obviously make sure that these types of problems don't happen again. And if they manage to do that, which I'm sure they will, then I think that this is a very good outcome for Delta Property Fund, essentially because, 2.5 million rand rap on the knuckles is not fun. Yeah, I was about to say. But it sure is a lot better than...
yeah, and I suppose it's the reputational damage more than anything, right?
Look, yes, and to be fair, the current management team and the current board inherited this from the previous board, so it's not necessarily their fault. Nonetheless, the company is branded, so it's a bit of a rebuilding trust situation. I think that's what this 5-year suspended fine is about. Is you've got 5 years essentially to pull up your socks and to essentially make sure that your socks stay up. And you don't do anything else wrong, and then we'll trust you.
Yeah. Let's not forget that 2.5 million rand really is a rap on the knuckles. It might seem like a lot of money to the ordinary man on the street, you and I. So, Petri, Nike cutting about 2% of its total workforce. It's around 1,600 jobs. What do we know that's led to these job cuts? Would you say perhaps unexpected from a brand like this one?
Yeah, look, not necessarily. I think this is indicative of what we were alluding to earlier. The global inflation situation is really bad. I mean, who knew printing half the money that's ever existed, during the period of COVID would lead to inflation? I mean, who could have seen that coming, right? Essentially, the consumer on a global level, particularly in the US, well, not particularly in the US, really everywhere, is under pressure, and their money's value is eroding fast. And the price of goods like food and shelter have gone up tremendously fast. So just paying rent and buying food has become so expensive that people are really cutting back on other expenses. And this is impacting brands, except obviously for the super luxury brands, which is unbelievable. But for, generally brands, retailers, clothing, even food producers, everybody is seeing, cutbacks in consumer spending. They're making fewer sales because people simply cannot afford to spend the things they used to before. And unfortunately, companies like Nike start to feel a bit of pressure because they're not selling quite as many shoes or whatever it is. Obviously, they sell a wide variety of stuff, not just shoes. And then, companies being companies will try to optimize, cut staff where they can to remain as profitable as possible. Yeah,
people can hardly afford the basics, and I think fair to say that Nike is definitely in the current environment a luxury item. Petri Redelinghuys, let me thank you for your time. A great pleasure talking to you this afternoon. He's the founder of Herenya Capital Advisors as we continue to take a look at your market moves this afternoon. In fact,